Hi, this is Mark Pizzacalla and welcome to the August edition of Legal Wise, What You Need to Know with Dr. Mark. Now, what I want to talk about today is trust distributions and in particular the ATO's new guidance on trust distributions. Now, it's very important for lawyers, accountants and their clients to understand when they do make a trust distribution, what it actually means for them. Now, usually this is done as part of year-end tax planning, but it's also done as part of succession planning and group restructuring and, simply when beneficiaries want income to be distributed to them. Now, look, in a nutshell, the issue is this. The ATO has released some guidance on Section 100 capital A. Now, it's an anti-avoidance provision, but this is how it works. If the trustee of a trust distributes income to a beneficiary, but the economic benefit, i.e. the cash, is distributed to someone else, then this provision may be called into play. Now remember, it's not a problem at all if the cash follows the distribution, but that's not always the case, because what tends to happen is that, particularly traditionally, is that distributions were made to lower taxed individuals in the family business or in the family group. Now, where a lower tax beneficiary doesn't receive the distribution, this is where it's a problem. So what are the criteria? Well, Section 100 capital A can apply where there's an agreement or an arrangement in place. A beneficiary is made entitled to some income of the trust. That beneficiary doesn't actually receive the benefit, or if you like, the cash. One of the purposes of any person being connected with the arrangement was to secure a lower tax rate, and the arrangement was not part of an ordinary or family or commercial dealing. Now, that last bit, family or commercial dealings, is going to be critical for some people to perhaps not be subject to these provisions, and I can see that it's going to be quite a litigated area going forward. Now, the other twist is that there's no limitation on these provisions. It can go back indefinitely, but the ATO have indicated that they will not go back further than 2014, but you can see there's still quite a lot of years open to question. Now, the other thing I wanted to mention was, as part of the guidance, as I say, the ATO has indicated that pre-30 June 14, unlikely for them to pursue that. However, where adult children have received a distribution but have directed that distribution to be paid to their parents in satisfaction of expenses, that will be dimly looked at. Similarly, where distributions are made to companies to secure that low company tax rate, again, and that's satisfied by a dividend made by the company, again, that's going to be dimly looked at and scrutinised. So look, I think what it all means is that we definitely have to have a rethink of how distributions is made. So before you do make any distributions, make sure that you do visit and understand Section 100 capital A. If you have any questions, by all means, reach out. Speak soon.